While everyone focuses on strategy potentially liquidating BTC, there's a massive group of Bitcoin whales that most people overlook. The mining companies. Numerous miners are grappling with increasing operational expenses. And with Bitcoin's value declining in recent months, these miners might become the first major holders to offload substantial BTC quantities. Here's the concerning part. Several have already begun shifting toward artificial intelligence, suggesting they may not consider Bitcoin mining viable long-term. That's precisely why today we're examining the Bitcoin mining sector in depth to distinguish genuine concerns from exaggerated fears. My name is Alex and you're watching Web3 Verse. Before diving in, understand that I'm not providing financial guidance and nothing here constitutes investment recommendations. This is purely educational material about Bitcoin mining operations. If that interests you, demonstrate your support by hitting that like button and let's begin. If you ask people which corporations are accumulating BTC, most would immediately mention Strategy or other prominent Bitcoin treasury firms like Metaplanet. Mining operations would likely rank lower on their list, which seems peculiar considering these companies directly participate in Bitcoin production. Many mining firms actually possess more BTC than several leading treasury companies. Next we have Riot Platforms, operational since 2017. Currently, it maintains 19,324 BTC. Beginning in the second quarter of this year, Riot Platforms has been liquidating hundreds of BTC monthly and has sold approximately 3,000 BTC to date. Then there's Hut 8 Mining Corporation, also established in 2017. The company has gathered 13,696 BTC and hasn't conducted sales this year yet. This is primarily because early 2025 saw Hut 8 partner with Eric Trump to establish American Bitcoin, providing significant momentum. Fourth on our ranking is CleanSpark, which commenced Bitcoin mining in late 2020. Presently, it holds 13,011 BTC. During the first quarter this year, CleanSpark sold minimal BTC amounts for operational expenses but increased sales significantly from April forward, similar to Riot's pattern. Consequently, over 4,000 BTC and counting has been liquidated. Finally, there's Cango Incorporated, representing one of the newer industry participants. It only began mining Bitcoin in November 2024 yet already possesses over 7,000 BTC. Cango hasn't sold any Bitcoin yet, and its monthly disclosures proudly declare that the company holds Bitcoin long-term without current intentions to sell any holdings. Why have Bitcoin miners commenced selling BTC? Multiple explanations exist, including Bitcoin's halving event in April last year. As you're probably aware, the halving reduces the BTC block reward by half. Specifically, from 6.25 BTC to 3.125 BTC. Logically, this effectively halved mining company revenues. Theoretically, this should have decreased mining as unprofitable operations cease. Practically, both Bitcoin's hash rate and mining difficulty have doubled since the halving. This means expenses have risen while revenues have fallen. For perspective, the average expense for mining 1 BTC ranges from $100,000 to $110,000 depending on your information source. Currently, BTC's value sits around $92,000, and that follows recovering from a dip to $80,000. Logically, this indicates Bitcoin mining isn't currently profitable. Yet just when it appears miners might reach breaking point, many have actually increased their Bitcoin commitment by expanding their treasuries. For instance, following the October liquidation, Mara purchased the dip, adding 400 BTC to its holdings. Meanwhile, other mining corporations are enlarging their equipment by acquiring additional ASICs. So no, it's not finished, but conditions have been demanding. So challenging that certain Bitcoin miners have chosen to pursue different strategies. Nearly every significant American Bitcoin miner has transitioned toward AI and high-performance computing. Why is this occurring? The explanation is unfortunately straightforward. Mining isn't particularly profitable currently, whereas AI and HPC certainly are. How substantial is the motivation to switch from mining Bitcoin to AI and HPC? A publication dedicated to crypto mining recently stated that Bitcoin mining has entered effectively the harshest margin environment ever. They added that at this level, profitability stress is no longer theoretical but systemic, considerably more challenging. Even the largest mining corporations with the deepest financial reserves and most sophisticated technology have been operating around break-even since last year's halving. Consider that the halving means companies profitable when BTC was $50,000 would now struggle at $100,000. And naturally, this raises serious concerns about the 2028 halving. Logically, the break-even threshold for miners would approach $200,000. This explains why mining companies are increasingly pivoting from their core operations to AI. For every kilowatt-hour of energy, AI data processing can produce 2 to 5 times more revenue than Bitcoin mining. Additionally, AI demand far exceeds Bitcoin demand since technology giants are competing to construct the most advanced and lucrative AI systems for their users. Here's the interesting development. In their competition to remain viable, Bitcoin mining firms have inadvertently positioned themselves ideally for the AI revolution. Many are already situated in regions with abundant electricity, operate industrial-grade cooling systems perfect for power-intensive AI GPUs, and run fully automated, remotely manageable facilities. Most significantly, these companies are intensely focused on maximizing uptime and efficiency. This is why numerous tech giants are approaching mining companies, scrambling to secure the GPU capacity they require. For example, in August, Google increased its stake in Bitcoin mining firm TeraWulf to 14%. Then September saw TeraWulf announce a $3 billion raise to finance new AI data center construction. Some Bitcoin mining firms have gone so far as completely abandoning BTC mining. One striking example is Bitfarms, which recently announced plans to entirely exit the Bitcoin mining sector by 2027. Consequently, most Bitcoin mining companies are approaching AI as a secondary business, at least currently. Their ASICs continue operating as before, but their operators are now managing two business models. Whether mining will remain the primary objective or eventually become secondary to AI is another question entirely. By now you're probably wondering how BTC's price could be affected as Bitcoin miners continue selling. The positive news is there's no clear direct correlation between miner sales and BTC's value. From our analysis, this stems from three key factors. First, it's widely anticipated that miners will occasionally sell BTC to cover operational expenses. So long as they're accumulating more BTC than they're liquidating, there's minimal concern. The selling is effectively already incorporated into pricing. The second factor is that mining companies typically announce their sales after completion, usually in monthly earnings reports. Since the precise timing of these sales isn't always transparent, BTC's price rarely reacts. The third factor is something mentioned earlier. Bitcoin miners typically sell their BTC over the counter, which has minimal price impact and often isn't even traceable to anxious Bitcoin observers. That said, some BTC sales by Bitcoin miners have been detected on-chain. For instance, in November, on-chain analytics revealed that Mara moved 644 BTC to exchanges on the 20th, coinciding with a 12% decline in BTC's price. There's also the complex issue of selling BTC to reduce debt. For context, Bitcoin miners had accumulated $12.7 billion in debt by October this year, largely to finance their AI and HPC transitions, and partly to expand mining operations. For reference, this represents a 500% increase from the $2.1 billion recorded in October last year. It's actually straightforward. Even if major mining firms reduce operations, all that will happen is Bitcoin's mining difficulty will decline, making it easier to mine BTC. Eventually, the cost of mining BTC will fall below its market price, which is likely to remain elevated from steady institutional purchasing. That said, any forced sales by major players could create short-term volatility, especially during a bear market. In that scenario, BTC's price might drop more sharply than many anticipate, potentially triggering a cascade of additional panic selling. The good news is even this wouldn't undermine Bitcoin's core value proposition or blockchain security. Many companies, whether miners or treasury companies, would likely purchase the dip, as would most investors. Before long, BTC's price would inevitably climb to new all-time highs, as it has historically. Bitcoin will continue growing from strength to strength, and those who maintain faith will be most rewarded. The question is, will you be one of them? That's all for today. Thank you for watching Web3verse, and I'll see you in the next one.